Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're experiencing some selling pressure today. 10-year note futures are coming off of some higher prices early in the session to trade lower throughout the session and currently priced at 111, right at the 111 handle down on the session. Now intraday we did see a high of 111.24 early in the session, and that was near recent highs, which also correspond with the highest level of over the last several months. But then selling pressure persisted throughout the session, and now we're trading near the low end of the range for today's price action, right around that 111 handle. Driving factors today, a couple of things influencing the market. Number one, JOLTS data this morning, labor data indicating openings increased. The market wasn't necessarily anticipating that big of an increase. And that's an indication that the labor market is still out of balance to some degree. At least that's how the Fed typically interprets that. And for this data point, it does appear that the labor market is still fairly resilient and has the potential to be resilient with the openings stated in the JOLTS data this morning. So that's one of the factors, I think, why we're seeing some selling pressure now, even though the Fed is in the quiet period and we will not hear from them until next Wednesday. The idea is it shifted sentiment, at least short term. Now, we will have a couple of data points the next couple of days. It will be big points for the Treasury markets and CPI and PPI, so inflation data coming out the next couple of days. Couple that with volatility we're experiencing in other asset classes, and that's another driving factor in the pricing structure today, as we're seeing, again, some selling pressure pretty much across the entire curve today. Yields, 10-year yield is up 7 basis points to 428 basis points today, so we are near the top end of the range for today's yield, and you're looking at the yield curve shifting higher pretty much across the entire curve. Selling pressure persists from the short dated all the way out to the long dated bonds, and steeper. So the selling pressure is a little bit more pronounced on the back end of the curve today, moving those yields higher relative to the shorter end of the curve. 10-year note futures, though, are coming off of the intraday highs, which pushed us up towards the 4-month levels, but now backing off, and today we're seeing yields moving higher and prices moving lower.